Good morning, Gareth. Thank you for having me. So it was a relatively quiet day in the markets yesterday, but we saw the all share end the day up about 0.4% to end off a very strong month. So we saw the all share index in the month up over about 8%. So year to date, back in positive territory again, up around 3%, which isn't anything to get too excited about, but hopefully we see this positive momentum continue into December so we can finish the year strongly. It was also a great month for offshore markets, which ended the month up around 8 to 10%. And this is all based on the view that rates in the US have peaked, and we are likely to see them come down next year. We also had the US consumption expenditure data out yesterday, which provided further support to this view. So the market is currently pricing in a 50% chance of a rate cut as soon as March next year. So that is what we've seen really drive this rally in the markets in November. Looking at the rand yesterday and also over the month, despite investors moving into risk assets on the back of this and the dollar also weakening over the month, the rand was only one of four emerging market currencies to weaken over the month, which I think does speak to some of the issues that we are facing in the country.
Yeah, absolutely. We're looking at all the currencies at the moment. Dollar 18.85 is what we have it at. Euro 20.54, and the pound stubbornly staying away from that 24 rand mark, 23.82, an increase of about 2 cents overnight. Okay, let's bring up also the commodities as well. Nick, I want to talk oil price as well, gold price. Gold price, I think everyone's just waiting to see what comes out of the US Fed. I imagine still worried about that interest rate cycle, so the gold safe haven still doing its part, and oil is going up, not dramatically, but I imagine it's something to do with OPEC.